Let's bring in Satori Fund founder and portfolio manager Dan Niles to talk about this space and his portfolio in general. Dan, good to see you. Obviously, a pretty sweeping kind of response, the aftershocks of that Snap earnings and warning going across social media stocks, advertising-based businesses. Does that make sense to you? How would you play it from here?
Yeah, it absolutely makes sense. And quite honestly, in some ways, this is a lot like Amazon's quarter, 3 months ago, where you had a lot of information that told you there was a problem. When Amazon had their Prime Day, they put out some stats. You could see unit growth decelerate. I think a day or two before Amazon reported, FedEx said, hey, our e-commerce business is massively slowed down, and nobody cared. And then Amazon reported, and then everybody was like, oh my gosh. So if you look at Snap, there's been data points like that. Adobe, September 21st, came out and said businesses, content creation has slowed down because people have gone on vacation this summer. And then the next day, Facebook had that blog post saying, the ad changes that Apple's made are affecting our business. People wrote that off and said, well, they said that in June, so that's not new. And then the traditional media companies this last week and a half, Omnicom, Interpublic Group, ad agencies, came out and said, we expect growth to slow down 3 to 8% from the third quarter to the fourth quarter because of what Delta has done. So there's sort of been this steady drumbeat, and then Snap reported and said we're going to grow 30%, not 50. And by the way, people that don't have products to sell aren't advertising, right? Which makes sense. If you don't have a car, why would you advertise? So I do worry about what's going to happen coming up because it's not just Snap. There's been data points. It's just investors with the market going up. The stock prices are determining the fundamentals right now, not the other way around. And so it takes out of the earnings to change that.
One of the lines that was pretty popular, I think, today to be sounded, and looking at the damage done, is that a company like Alphabet, of all of them, might be least exposed to a lot of the pressure points that are impacting Facebook and Snap with regard to iOS changes and things like that. But that's not something you buy, I gather, because you're no longer in Alphabet?
Yeah, for us, we were looking at some of these data points coming in. They were making us very, very nervous. And, Google was up close to 60%. So, as we've had plenty of interviews with Sarah and you and Wilfred, that's been our favorite internet stock. But we're like, the thing's up a lot. Don't forget, they kind of benefit from the things Apple's doing, because if you can't get the measurements you want off of Apple, well, why not advertise on Google? The problem is the other part of the issue is that if you don't have a product to sell, you're not going to advertise. And that affects Google also. So from our perspective, that's why we decided, you know what? We don't need to take that risk into earnings. We were thinking about Snap. We wish we had shorted it. But, this is one of those situations where everybody's leaning bullishly, including ourselves up to a couple of weeks ago, on these internet ad names. And now you really have to think about it, because when the data tells you something's changing, you should change.